Oh boy. ASML, which manufactures semiconductor equipment, is down over 9% this morning after reporting earnings. So let's take a look and find out what's going on with ASML and if it might be a buy today. So just some quick background if you're unfamiliar with ASML, they develop and manufacture lithography equipment, which is used in semiconductor manufacturing. And essentially they are the go-to company for lithography equipment. They are the leaders in that space. That is their specialty and their niche that they have found, and it has led them to become a $400 billion company. Essentially, their lithography systems use something called EUV, or extreme ultraviolet light, to make mass production of the world's most advanced chips possible. So one might compare them to a company like Applied Materials, which sells equipment for the semiconductor manufacturing industry. However, ASML is a bit more specialized on this lithography niche, whereas Applied Materials kind of has a broad portfolio of semiconductor equipment that spans across multiple things. The reason ASML's technology is so important is that as time goes on and chips become more and more advanced, the chip makers are packing in smaller and smaller transistors to make these chips more powerful. And with these smaller transistors requires the technology from ASML, and you can see how they've become the massive company they are today, because semiconductors of any kind are going to need their technology. And we all know that the demand for AI has driven a huge increase in sales for data center chips for companies like NVIDIA and AMD. So one would think that everything's going really well at ASML. So let's take a look at the earnings report and find out what went wrong and where they fell short. What I like to do after an earnings report, just so I don't have to go digging through a whole bunch of financial documents, is to see what the news sites are saying about the earnings report. So Barron's does a nice job of breaking it down and summarizing it in a quick headline. ASML stock falls after an earnings beat and orders rise. So that's interesting. So you would think that an earnings beat and an orders rise would help out the stock, but it's actually hurting it. So that could be that the market has even higher expectations. So they were expecting a beat. So when a beat happens and it pretty much just lives up to the market's expectations, sometimes you see a sell-off like this. But what we can also see is that there may be some concerns about curbs on exports to China. And this has to do with the upcoming United States presidential election. But at this point, that is pure speculation and nobody knows for sure. So second quarter sales were 6.2 billion euros, which is actually down from the year prior by about 9%. So, okay, that's not great. However, we need to keep in mind that the semiconductor industry is in a downturn this year, and it's not just ASML that is seeing a slowdown in growth. It's also companies like Applied Materials that I talked about earlier. They're actually seeing flat year-over-year revenue growth, even though they're highly diversified. So even though ASML saw quarterly sales down year-over-year, they're actually expecting a stronger second half. In their financial outlook here, they say 2024 total net sales is expected to be similar to last year. As a result, we expect the second half of 2024 to be significantly higher than the first half. And we see that here. They expect in Q3 of 2024 total net sales between 6.7 billion and 7.3 billion euros. Now that's a pretty big range, but right at the middle is 7 billion euros, which represents an increase of about 4 to 5% year over year. So they're going from negative growth to positive growth next quarter. So just like they said, the second half of the year is expected to be significantly better than the first half of the year. Okay, so I think we've seen a bottom for ASML in their revenues. So that's great. They're back to that growth trajectory. Even though this fiscal year is supposed to be kind of similar to last fiscal year, the next year, 2025, should reignite their growth. So all of this sounds pretty good. Why is the stock down? Well, it's anyone's guess, but if I had to take a guess, I would say, for one, this is quite a broad range. A range of 600 million euros leaves a lot of uncertainty for the market. Is their actual revenue going to be closer to the 6.7 or closer to the 7.3 billion? Also, the restating of their financial outlook for 2024 was probably also a bit disappointing to the market. Essentially, when you have a company that has really, really high expectations, any little bit of even neutral news can send the stock down. So reaffirming this guidance that their revenue is supposed to be the same this year as it was last year is a bit disappointing because perhaps the market was expecting some surprise growth, especially with all of this increased demand in chips that we're seeing from the AI and advanced computing sector. So with the stock down 9%, let's take a look and see if it is worth buying, and I'll analyze it on my spreadsheet and look at some of their financials. So this is my spreadsheet where I analyze growth stocks on 4 different factors. Those are gross margins, annualized revenue, which shows how much market share they've captured, price to annualized sales, which shows valuation, and year-over-year revenue growth. I aggregate these 4 things and give the company a score. Out of 20, you get a possible 5 points for each category. My average is about 12. So ASML does score a bit below average, and that's only because their growth is a bit stalled at the moment. I put in the 4.9% year-over-year revenue growth that's expected for next quarter. I didn't put in the negative revenue growth that they just reported for this quarter. So this all could change very quickly. Let's say that they start growing again and their growth becomes double digits of maybe 11%. Well, then their score bumps back up and then they're right alongside Applied Materials. However, I'm just using the information that they gave me for next quarter, so we need to keep that in mind. What's giving them a lower score from peers like Applied Materials is that they do have a higher valuation on a price to annualized sales basis. So they're currently trading at about 13 times price to annualized sales, where peers like Applied Materials are trading at about 8 times price to annualized sales. They have very similar annual revenue numbers as Applied Materials and very similar gross margins. What I like about Applied Materials is that their SG&A costs are extremely low, which is really nice because that's a recurring expense that they don't have to worry too much about. Their R&D costs are a bit higher than Applied Materials, but the semiconductor industry is notorious for high R&D costs, so honestly, 31% is nothing that I would be too worried about. Let's take a look at some other metrics that my spreadsheet doesn't capture. ASML's balance sheet is looking really good. This is their latest balance sheet, and it shows current assets of 24 billion euros and current liabilities of 16 billion euros. So they are in a healthy place. And when we look at their overall balance sheet, we do see that they have positive shareholders' equity of about $14 billion. So all in all, after just a brief look, this looks like quite a strong balance sheet. One thing to note here is goodwill and intangible assets, things like patents, licenses, things you can't physically actually see. Those are intangibles, together make up about $9 billion. So when we take out intangibles, their total equity drops to about maybe $4 billion. But still, their assets, even without intangibles, are greater than their liabilities. So I would say all in all, ASML does have a solid balance sheet on a very surface level overview. In looking at their free cash flows, we can see that they are on an upward trajectory. However, they had this really blowout year in 2021 for free cash flows, and those are stabilizing. So that's one thing to keep an eye on. But what I like to see is that over the long term, we do see an upward trend in free cash flows for ASML. So that is good to see that they are a cash generating company. All in all, after my very cursory look at ASML, I'm definitely going to put them on my watch list and do some more research into the company. I think they develop a product that's very, very important to the semiconductor industry. They are the undisputed leader in that product, lithography equipment, and their product is going to be used to manufacture any kind of semiconductors. They're a large established company with almost a $400 billion market cap. And even though they have a slightly high valuation on a price to annualized sales basis, they are expecting to return to growth in the second half of this year and potentially continue that growth forward into 2025. So that valuation may be justified. So I think today's dip actually does present a nice opportunity if you're interested in ASML stock. It's also worth noting that I do own Applied Materials, so I already have exposure to semiconductor equipment through them. So I'm not exactly itching to get more semiconductor equipment exposure, but ASML is still a solid company and one that deserves to be analyzed on its own merits, so I will be doing some more research on that company in the near future. If you liked this video, please hit the like button, and if you disliked this video, honestly, hit the dislike button and let me know how I can improve. This is just a cursory look about ASML, so it really helps to do your own research, but if you have any questions about the company, leave them below, and if you have any stocks you'd like me to analyze going forward, please let me know about that too. I love taking viewer requests for stock analysis. Thank you guys so much for watching, and I hope you all have an amazing day.